All right. Hey, everybody. We got Renee Aliskis here. We got Simon Hanvey.
Hello.
We got Megan Bean.
Hello.
We're here to talk about real estate mortgages, and we're going to have some fun. We're going to talk about first-time home buyers. We're going to talk about sellers in this market, and we're definitely going to touch on mortgages and how it's been changing so fast. So throughout the webinar, by all means, just put any questions that you have in the chat. We're going to be checking the chat throughout and just ask away. So we're going to start the presentation, and here we go. Let's have some fun. All right. So if you're on this webinar, hopefully you're a first-time home buyer. You got lots of questions. If you're watching this another time, hopefully you can reflect and look at all the advice that we're going to give today. If you're a seller and you're just curious about what's happening, this is going to be a great opportunity to hear what we've been seeing at ground level. And hey, if you're just looking for a new mortgage and some options, we're going to give you some great tips at the end of the presentation. So
we might just do a little feeler with the poll.
Oh, good point, Megan. We're going to do a feeler. We're going to have some questions that we're going to ask throughout, and it's just to keep you engaged. But Megan will put that on in a few minutes. So here we go. So what we're going to talk about today, outside of meeting Simon and Megan and talking about real estate and mortgages, we're going to get into whether or not this market is a good market or is it a bad market. There's so much media going on, and we're just going to shed some light on the market, specifically to the Oakville, Burlington, and Hamilton region. We're also going to talk about why the shift. What are the main reasons that we've seen in this shifting market? We're going to go over the current trends and what is the normal market. And we're going to go into some tips. Megan's going to give us a few awesome tips that every buyer and seller need to know in this current market. Simon's going to jump in with some solid tips as well. Definitely go through the mortgages. Then we're going to go into some facts about why this market is not a crash. And I know a lot of the media is talking doom and gloom and recession and whatnot, but we've got some good stats to put some positive spin on this. And we'll end it with a question period. So here we go. In terms of the market, is it good? Is it bad? I mean, hey, if you're watching right now, feel free to put in something in the chat, because we're going to tell you why it's a great market. I know there's a lot of stuff happening, but if we look strictly at numbers, the market has adjusted a lot since January and February. The good thing about this market is that the prices of homes have dropped so much, and they've adjusted so much that it gives an opportunity to buyers to be out there and actually have a chance at purchasing a home without the stress and the bidding wars. When we look at this chart in particularly, when we look at these numbers, like they're astronomical. In the last 2 years, if we look at 2020 and 2021, the growth is huge. Like, we're looking at just detached homes here, but if we look at 2020 in Oakville and Burlington and Hamilton, there was about a 13 to 17% growth. If we look at 2021, there was a 17 to 27% growth in detached homes, which is astronomical. And this is why I'm saying that the market is not as bad as what people are making it out to be. Because if we look at July, this past July versus the last July, the market is still up from anywhere from 2 to 5%. And that's given everything that we've seen. That's given all these interest rate increases. The fact that we're still up versus a year ago, this is why we're feeling really good for sellers. So it's all about just having the proper list price and the strategies. But we're going to show you some more stats here. So a lot of people have heard this acronym, MOI, months of inventory. But if you haven't heard this acronym, it's very important to know that a healthy market, in a balanced market, you need 4 to 6 months of MOI. In 2021, we were below 1, which is one of the biggest reasons that we didn't have the supply. We had so much demand. Right now, we're hovering anywhere from 1.9 to 2.2 months, which is still below what a healthy, balanced market should have. We should have 4 to 6 months of inventory, which we don't have it. Now, if we compare the inventory versus 2021, we've seen an increase of 136 to 154%, which is
Crazy.
just nuts.
We needed that.
Yeah, and that gave hope to buyers all over again, and it gave time for mortgage brokers to actually do some due diligence with the buyers. So more inventory just definitely helped this market. The sales are down 30 to 45% versus last year. So a lot of people are asking, is that a good thing? Is that a bad thing? Megan, like, what do you like? What if you were to just have a couple guesses as to why the market would have taken like such a hit? What do you think? Just a couple of reasons would be that the market would have taken that big of a hit in terms of sales.
Well, I think it's what you said is just the media has portrayed, it just puts fear out there for everyone. And it's really hard to understand if what you're reading is actually true. I also just think based on COVID and people being able to travel again, people are just taking their time this summer and traveling and going out and just forgetting about it for a while. So that definitely affects things. And then also obviously rates going up, that's huge. Again, people just don't know where they can get the most accurate information. They're kind of scared to open that door. And so just that creates a lot of fear.
A lot of uncertainty, right? And like going back to rates, I know we're going to touch on rates more, but seeing this number of literally 30 to 45% sales down, like there is a lot of factors, right? What would you say from a mortgage standpoint? What would be one of the biggest factors that you think would have contributed to that versus last July?
Well, qualifying has become a little bit trickier too now, right? So they've changed how you can qualify for a mortgage. So what you could afforded 2 months ago, you can't really afford today. So that's also playing into it. I did see a really interesting fact though too about homes for sale and how long they sit on the market and what percentage of them actually sell.
Right.
And in a balanced market, it's roughly around 55%. And so I think we're also coming off of unrealistic views of our market.
100%.
Where the peak in January, the percentage of homes sold on the market was at 88%, which is like an all-time high. So now that we're back to more of a balanced market, I think they said that the number now on average is about 45% of the homes are selling. So it's put us slightly into that buyer's market,
Right.
but we're only slightly under what a balanced market should be. So
yeah, there's a bunch of factors in the next portion here. This is where I like to give clients a bit of relief. I know after seeing the articles in the news and the media, sellers are so hesitant right now, and I don't blame them for certain reasons. But when we look at the market versus 2021, the detached house market, it's still up in Oakville, Burlington, Hamilton, anywhere from 3.4 to 6.8%. Over the last 40 years, if you were to take an average in the Oakville, Burlington, Hamilton market, it's somewhere in that, I think, 5 to 7% appreciation. Outside of what happened in 2017 and what's happened in this market, proper appreciation is around 5 to 7%. So the fact that detached homes are still up versus last year it's a great sign. Townhomes are up anywhere from 2.3 to 11%. So they've adjusted quite a bit, which is good because they were just becoming unrealistic, these prices. The condo market's been pretty resilient. It's still up 4.3%. And in Oakville, it's actually hit 30. It's still up a lot, 35% in Oakville. So those are some reasons why the market is good. If we jump into, sorry.
no, that's
It's mind blowing them. It is.
Surprised
It
goes up that much still.
We've been praying like for the last year that the market needed this shift. It needed an adjustment.
Yes.
We've been working together for years, Simon and I and Megan. We've been just praying for this. So buyers, like, this is awesome. It's great news. First time home buyers. We're there to support and guide you and show you the way to get these homes in this market. This is a great market for first time home buyers. Yes, the rates make it a little bit interesting, but Simon again will touch on some tips. But why the shift? Like, this is the question that we get asked every day and have been getting asked this for months. So one of the biggest reasons that we did see a huge shift was buyers just being tired of the bidding war. They were tired of losing 2 years of constantly losing going in and just getting demoralized. Like buyers literally just gave up. And if you're out there, buyers, we're saying come back to the market because this is great. It's a nice opportunity to go get a home below market value. Put conditions on there. So buyer fatigue was a huge one. As I mentioned earlier with stats, the inventory is up so much. When there's less buyers, and then more inventory keeps rolling in, that's a perfect storm for the buyer. Increased bank rates, which we're going to touch on that. Like we didn't see the rates coming in that intensely that fast. We knew they were going to go up, but that one has been a really big one in the last few weeks. And as Megan was saying earlier too, like just buyers are traveling, so a lot of people are taking vacations. And the funny thing there is that the staycations are going through the roof right now because a lot of people can't even travel as much as they want to travel. They're having issues, so they're just giving up on that, but they're still going somewhere. So a lot of people are just forgetting about the real estate market for a bit. It's been 2 years that people have not been able to enjoy life. So a lot of buyers are just out of the market. And the fifth point that we've seen a factor, like just gas prices are, they've gotten better, but I know when we've dealt with clients and like we're asking clients now about gas, and they're taking that in consideration, and it's not just like $50, it's like a few $100s more, and that's just making ratios all wonky. So
nobody a year ago thought 175 for a liter of gas.
Well, now we're saying, okay, good thing it's at 175 instead of 210.
Anything under two is like a deal apparently.
Yeah.
So we've been conditioned to just pay the ridiculous prices, and now, so gas prices are a thing. And when you factor all of this is how you see these shifts happening out there. So what is a normal market? What is the current normal market? And a lot of first-time home buyers that are getting into this market, they just ask the question. They're like, well, how was it before? And what do we do now? And then the buyers that got out of the market back in January they're nervous about this. It's almost like too good to be true. So what are some of the top 5 items that we're seeing here is no bidding wars. We really are excited that we're not seeing the bidding wars and the competition and these grossly overpriced homes. So we're saying this is normal. It could change next year, who knows? But right now, this is normal. And if you're looking at this number here, when at the height of the market, homes were selling about 11 to 26% higher than today's price. So the market has adjusted close to 30% in some of these markets. Home selling below asking price, that's a thing. It wasn't a thing for 2 years. Well, guess what? We list a home now, we're actually educating our sellers. So if you're a seller out there, we will educate you and say, let's list it at a fair price, but don't be shocked if you're going to get negotiations come in at X price. We're seeing about 4 to 5% below the list price in this current market. Days on market, that's something that we've been dealing with. We've been educating clients again that it will take maybe 4 to 6 weeks now, or 6 to 8 weeks, or 8 to 12 weeks, which is absolutely not what we were saying months ago when they were selling within 24 hours or 48 hours. So this is a normal market, right? Like if anybody who's been in the industry for more than a year or two, this is how it was. And even I know there's a lot of agents out there getting into the industry now, and they've never seen this, so they're very shocked.
Well, even booking showings, like you can book 5, 6 showings at a time now, and like a single night instead of like one showing here, and then you put in an offer, and then next week one showing.
Oh my gosh, it was like a bidding war just to get in the door, and just to get an appointment was a mission. So this is a normal market. Also, relisting and prices being too high and clients adjusting. This is normal. It wasn't a thing for the last 2 years, but now clients will list and then they'll adjust. And all we can do is advise on what's happening in the market until we find that proper trigger point of what buyers are willing to pay. And the fifth one is probably one of our favorite ones too.
Absolutely.
This is for first-time home buyers.
Due diligence.
It's a big one. Conditional offers are back. Simon loves us because we're not going in firm. It was a stressful time in the crazy market when we had no time to think and just barely get a pre-approval, and now we can say, okay, Simon, we got 5 days to breathe, right?
So
So
asking for like an extra 50 grand at 10 o'clock at night, see if you can get your
my
offer
gosh.
accepted, but.
yeah,
Yeah.
yeah, it's this is a great market for buyers, sellers, like, as long as you know that you're doing good in terms of the appreciation. If you bought last year and you're trying to sell this year, it's a little bit trickier. If you bought early in the year and you're trying to do a quick flip, that's not a great idea. But overall, if you've lived in your home for like 3, 4, 5 years, it's still a good market. So,
It's just relative. If you're gonna sell low, you're gonna buy low. I always like to say about the relativity, because most people, it is a relative transaction.
well,
for
I
the most
love
part.
that point, Megan, because on a personal note, my family was looking to buy a home back in January in the hype of the market, and thank God we didn't buy that home, because that home, I think it's got to be about 25-30% lower right now. We could get that same home right now for about 25-30%. And sure, the values of our home has gone down, but nonetheless, that gap is it's nice to know that we can go out and peacefully look.
Yeah, and I mean, one thing to the conditions too, which I'm seeing more and more, which you guys would probably speak to this more, but that I didn't really see prior to this was like the condition of your home selling
Right.
when you're putting in an offer,
Great
which I
point.
think is a phenomenal condition for maybe not obviously first time home buyers, but
Yeah,
there's anybody
that's an
listening.
awesome point. Like, we actually have clients that have taken advantage of this, and this could be a norm. It's if we go back a few years ago, that wasn't as common, but now we have to think outside the box, and we have to get creative, and a lot of people are getting into that condition of sale of home. So it could be a thing for the next few months. So here we go. So do you want to do the poll? How about we just
Sure.
put out the poll out there? We just have a few little questions. We're gonna put a poll out there, give you a few seconds to have a look at the poll, and here's a few questions. So take your time. We're gonna continue with the presentation. So tips. Everybody is asking us for tips, and are we psychic? Can we look into the future? What should I sell? Should I not? Do I do fixed rate? Do I do variable rate? What's portability? Should I do that? There's all sorts of questions, and we're here to give some solid tips. 4 tips from a real estate perspective. This is a big one, right? Setting realistic expectations. It's huge. In this market, there's a lot of sellers that are still expecting prices from Q1, and there's nothing worse than saying they're going to get even remotely close to that. So setting the expectation from the beginning as a seller is important, and as a buyer especially too, right?
Yeah, buyers, sometimes you can't get 200 grand under the asking price. There has to still come to a realistic meeting in the middle there. So that's super important that just both are managed.
Right.
And then, so getting 100% qualified, speaking with a mortgage broker beforehand, speaking with your bank, whatever you want to do. That is just going to make sure that you're safe and that nothing happens during the conditional period. You're ready to go. Nothing's going to happen to your purchase. And sell first.
This is the tip number 3. You have to sell first. Back in the crazy market, we were saying, go buy. You need to buy because selling's easy, and buying was a lot trickier. So now we're saying sell first. Let's find out what you can get in terms of equity, down payment, and then once you got your finances in order, then you go purchase. Points or tips 3 and 4 go hand in hand really nicely.
Yeah.
Because if you are going to sell, you should get a long closing, because even though inventory is good, you need to have that peace of mind that a long closing is going to help you find your dream home. And really important that sell first, get a long closing. And the neat thing is a lot of sellers are willing to give that long closing in this current market, especially if it's been listed for 30, 40 days, 50 days. Sellers are really good to work with in that regard.
Yeah. Just everyone's answered our polls here.
Awesome.
Oh, actually 2 out of 3. So friends and family, they heard about it. So all of our marketing, forget it.
Yeah.
Noted for next time. We've got some investors. We have 2 investors in this meeting.
Awesome.
Okay, I like this answer. People are feeling hopeful and they see the opportunity. So that
Yep.
means we're doing something right here, hopefully. And then has the recent rate increases taken you out of the market? We have 1 yes and 1 unsure.
Right. And I think this is that kind of a market where people are really, they're on the fence, right?
Yeah.
A lot of
Yeah.
people. So thank you for the poll. That's
Yeah,
awesome.
It's good to know.
So we're gonna jump into, I believe,
It's not working now.
Uh-oh.
all right,
might just say
mortgages. I'm gonna just fire off a bunch of questions to Simon, and if anybody out there has any mortgage questions, put it in the chat. But here we go. Simon, tell us about the fixed rates, and will they fluctuate? What's the rumor about fixed rates right now?
Yeah, so, so just this week, the bond yields of Canada decreased, which in turn decreased our fixed rates. So it has only increased the insured mortgages at this point, or insurable mortgages. So if you're purchasing something with less than 20% down, or if you're coming up for renewal, is another bucket that you would fit really well into these lower fixed rates. It does help slightly on the purchase side in terms of affordability, because you're qualifying at whatever the rate is plus 2%. So we were
Nice.
talking about kind of earlier in terms of affordability, or even in that poll, where it is taking some people out is typically on a variable rate, you would qualify at the benchmark rate of Canada, which is 5.25%. So that's changed recently to reflect more of how you qualify under the fixed rates. So whatever the variable rate is plus 2 is what you're going to qualify for. So that in turn is allowing buyers to qualify for less than what they may have been approved for prior to the July rate hike of 1%.
Nice.
But yeah.
Now, in terms of penalties to break,
Yes.
like when should clients be worried about that, or when does it make sense to break certain penalties?
So yeah, so if you had a fixed rate within the last 5 years, right now, if you needed to get out of that mortgage for any reason, is a fantastic time, because you only have a 3 months interest penalty to get out of it.
Right.
If you've gone into a fixed rate within the last year, or probably 6 months, and you want to get out of that in the next 2 years when rates start to come back down, you're going to have a massive penalty to get out of that mortgage. So if you are thinking about selling in the near future, you may want to even look at just doing a refinance now, put yourself into a variable rate, which may increase your payments slightly, but in turn, in 6 months to a year from now, if you want to sell, once this market kind of rebounds back to a seller's market.
This is really cool.
penalty
So
will be-
this is really good. I don't think definitely a lot of first-time home buyers maybe haven't heard of such a thing, but
Yeah,
this is good for us, because we know a lot of clients are in fixed rates.
Yeah.
And we know a lot of clients of ours are going to be selling in the next 4 months, 6 months, 8 months. So
Yeah.
and the penalty's always been brought up, but getting
Yeah.
them into a variable, if I'm hearing this correctly,
yeah,
is it's an easier burden.
it would be,
Okay.
yes, for sure.
Amazing. So
Yeah,
what about the fix for insured and renewing
Yeah.
2-year max?
yeah, so like I was saying, so if you're purchasing right now, or if you're renewing right now, you know, if they come down even further, those 5-year fixed rates, where you could be at around 4% and maybe even 3.99, if it keeps trending down that way, then you know that's a pretty decent rate for you to lock in for 5 years. If you're looking to refinance right now and you're really don't sleep well at night because your variable rate may change,
Yeah.
do not take anything longer than a 2-year fixed.
Okay.
Okay.
Very
'Cause
good point.
within that 2 years, those rates are going to come back down, right? And then you can lock into a
So
great 5-year fixed at that.
I'm gonna do what my clients have been doing with us. I'm gonna play a game with you. Crystal ball, right? Crystal
Yeah.
ball. With all these rate increases, do you see the fixed rates continually going up, or do you see, like, what is the best advice? I know we're gonna get into a few other points, but fixed, variable, and like what do you
Yeah.
genuinely see happening? Because I have a lot of clients that are just thinking of like getting into a fix just because they're so worried about
Right.
what's happening.
Yeah.
But if we look at like history and
Yeah.
just what's happened in the last few years, like what do you really think?
Yeah,
is
so
that-
historically, the variable rate has always been lower than the fixed rate.
Mhm.
So even though that 1% increase happened, it was just basically closing the gap between the fixed and the variable rate right now, which is still almost 1% less than what you would get in a 5-year fix. So if for a long-term investor or somebody who's gonna own their home for the next 5 years, I would say stay with the variable rate. Within the next 2 years, we're gonna see those
Okay.
rates come back down. You know, when we talk about the doom and gloom, like, so there's talks of a recession that's gonna happen, and we may see a 20%
Right.
decrease, which is really not gonna affect us that much based on the increases we've seen year over year. But what they do at the moment that happens is they're gonna decrease all of the variable rates, right? So it's gonna allow all of us to basically have more money in our pockets to go out and spend and continue to stimulate. the
So
economy.
do you see a ton of refinances happening? Call it could be end of the year, next year, if the rates do
Yeah.
take a backward.
So it's funny because there's two schools of thought. So all of my investor clients right now are like bum rushing the door, basically saying, refinance me before my value drops in my home, so I can pull this equity out now, because they
Good point.
understand that when these prices drop a little bit, they're gonna go buy something else.
Yeah.
Right? They're like, there's a fire sale coming. I'm
Mhm.
going to buy some.
That's that's
Right.
another great point for our
Yeah.
investor clients, right?
Yeah.
If you're out there and you're, yeah,
Yeah.
that's a great piece of
Yeah.
advice, just, right, because, yeah, the market could, I guess, the market could keep adjusting a little, but if you're an investor out there, I wouldn't worry too much
No.
about that. We've kind of hit, not, it's hard to predict, but I think we've adjusted so much since the hype.
Yeah.
That to keep going down another 5-10% would actually put us below 2020 pricing, and that 2020 like that would be a bit of a hit. And I've always said to clients and investors, if we start to go below 2020 pricing or 2021, that's an issue. Right now we're still ahead. So
Yeah.
in the stats that we mentioned earlier, we're still between 3 and 6%. But if we do this next month and the following month and every month, we're saying, oh, now we're like,
Yeah.
we're actually not up. We are actually down like 5% lower than last year. And then the following month, we're down to another 5. Then it's almost like we got to come up with our own trigger point.
Yeah.
Mhm.
And I mean, for investors too, like the rental market's going insane.
Yeah.
Yeah. That's a
So
good
if
point.
you're an investor, hold on to that property,
Yeah.
Yeah.
right? Get a new tenant, get your rates, your rental rates up, and hang on to that
Yeah.
property. It's gonna come back for sure.
So here's where are we at? We are at variable long-term hold for 5 years
Yeah.
to be discounted.
Yeah, so again, yeah, so if you're in your dream home currently and you're in a variable rate, stay there. Within the next 1 to 2 years, you're gonna see the rates come back down, and you're gonna enjoy that discount. So just if you can ride it out for the next couple of year to 2 years, I would definitely stay there, because again, rather you panic, you lock into a fixed rate right now, and then now you're stuck in this massive rate, and the rates come back down.
Yeah.
And you can't get out of it because your penalty's huge.
Mhm.
You're just gonna be shooting yourself in the foot.
Hang in
So,
there, everybody.
yeah.
We got this.
Yeah.
We got this.
For sure.
Here's one of the last points. I think a lot of our clients and just people in general are asking about, like, what does 1% of that the most recent
Right.
tax hike, or sorry, rate hike, what does it really mean on like a payment of like $1 million if you have a more $1 million mortgage?
Yes.
If we could give that example of
Yeah.
what that meant when that 1% went up.
Right. So I did a sort of a costed average of a variable rate at prime minus 75. So between beginning of or fall, I would say, of 2021 to now, the average variable rate was about prime minus 75. So if you were in that and you have a mortgage of $1 million, you're going to see an increase of about $550. So I mean, if you're in $1 million mortgage, you're probably in a situation where you can afford that.
Right.
You know, and then obviously if you're in a fixed
But
rate.
it's times like this, and this is why we work really closely with mortgage brokers, because they're like realtors, like we're
Yeah.
24/7. We're looking at this constantly, and as especially new first-time home buyers, you need to know these changes that could happen. Sure, you can get a mortgage, but it's good to be educated about, well, if the rates do go up, we'll be prepared to have this extra few $100. And nowadays, when everybody's factoring in gas and inflation, I don't even want to get into inflation with the cost of celery and grapes and
Yeah.
all these items. Like inflation is ridiculous right now. So people are really budgeting. And I used to say this last year when we used to see like 25 points increase. I used to say it's okay. It's not the end of the world. But gas wasn't the way it is. Inflation wasn't the way it is. And in all honesty, 25 points was okay.
Yeah.
We were fine. But when we're seeing 1% it really changes. It's a game changer, and you need to know you're budgeting really well. So so anything else that you want to add? Any like your top I know we talked about a lot of tips, but anything
I mean, if you're, we're targeting like, and speaking more about home buyers right now. And definitely if you've been struggling to get in the market, now is a great time. And your monthly payment that you may have, seen a year ago when you got pre-approved or were talking to your bank or a mortgage broker, I wouldn't be discouraged. I would say that like you're buying now, you're buying at a discount as when before you were buying, on a fire sale. And like I've got clients that are, that I pulled their credit in October of 2020. They're closing on their purchase this month. And he's like, I don't care about the rates. He's like, I'm just happy to now finally be in a home with my family and I don't have to fight anybody. We got it under ask.
And you know what? That's a great question. I'll put it out to the chat and see if anybody answers, but I'll put it out to us as well. What would you rather have? Control of the price that you could potentially get a home with a higher rate, and you know what the rate's going to be, and you know your finances, and you know the exact budget? Or would you rather have what we had back then? Yeah, we had great rates, low, extremely low, but we were paying 200,000, 300,000, 400,000 over homes.
Getting outpriced every week.
It's like just buying because you're buying, right? Like if you ask this to 1,000 people, I think 999 will say they'd rather have some control of the home they're buying, even if they have to pay a little bit higher rates.
Right.
Well, now that you have the conditions, you're not getting surprises with maybe a home inspection that you didn't have. So like things wrong in the home that you didn't know about, that you have to pay for out of pocket.
Yeah.
Things like that are scary.
There was a lot of horror stories going on during that market. And it wasn't just the price that they were paying. It was what was in the home, and then even having buyer's remorse, and just there was a lot of issues going around. So again, I think I'd pay a little bit more of a rate increase.
Buyer's remorse is a good one, because if you think about it, if I bought a property for 30% more than what I could buy it for today, because I bought in the peak with a lower interest rate, or I can buy it for 30% less with a higher interest rate, we're kind of balancing out, right? Yeah. But now you don't have the added stress of fighting the guy beside you to buy the
The emotions were so high. Like it was just such a go. You didn't have time to think.
You know what? I feel like we like a chunk of good realtors out there are a good reason for telling a lot of our clients, just go have a vacation, forget buying. The amount of clients that we were telling, it's not worth it. It's not worth it. And if you can hold off, we were saying just hold off. Like
we knew it couldn't continue. Like
we
just
knew
kept
it was
saying
going to get to that
like
point. And I have clients right now that thank God they didn't buy in the hype of the market, because the difference is like certain pockets, right? Oakville has some pockets that are just lucrative, and now they've adjusted so much. So all in all, we're just happy it's adjusted. And hey, for our clients that did buy in the hype of the market, it's because we were selling at the same time, and like Megan said earlier, we were still getting top dollar. So hopefully we're getting you into a fair mortgage at the time, and the rates being good. So I think we are okay. Yeah. So just before we finish our webinar, this is kind of what we've been saying throughout, like the market's good. It's not a crash. We really are, one of our biggest takeaways here is that we're living and breathing what's happening out there. We're seeing that values are still up. So this is an adjustment. It's not a crash. So if you're out there with friends, family, on a weekend having a beverage, I mean, talk about it. It's not a crash. This is it's just an adjustment, and we got the stats to prove it. We don't expect this to last the whole year. That's what we're saying here as well. We feel that it could be the fall could pick up. So when
Everyone
all
coming
these
back.
buyers are back, it could get very interesting for the sellers. So we're urging our buyers right now that it is a great time, because we can't control if we even get an extra 5, 10, 15% buyers in the market, that could change everything. Listing prices must be realistic in this market. So as long as they're realistic, the prices will continue to be okay. This one is kind of more for Simon, but if the rates could keep increasing, so it's just something to be aware of, and it could be another adjustment. So
Yeah, fixed rates are gonna be all over the place, I think, in the next 3 to 4 months, just based on what we're seeing in the stock market, what's happening to our bond yields, and we're gonna see them kind of fluctuate up and down. Variable rate, we're probably gonna see another 0.5 point in September, and I would imagine that once we start to see things cool off even more, we'll see the variable rates come back down within probably 12 months after September.
And just a quick question on the rates again, just in case there are first-time home buyers here, but what's the longest that you can lock into a rate?
120 days.
Wow, that's a long time. So
It's great.
if you can lock into the rates now, it's just a good opportunity to get in and talk to the mortgage broker and just start getting the ball rolling. We sometimes find clients, they feel that when they're ready to buy, it's almost like they want to do everything all at once, and it's almost like they should do things in phases and steps. So if you're not ready to buy right now, that's fine. It's, go out and just start getting some knowledge
Check the
and
documents, that kind of thing.
lock into your rates.
Mhm.
This market right now, one big thing that we do want to always point out is there's a lot of realtors out there that haven't seen this kind of a market, same as mortgage brokers. We've been fortunate that we've seen the market when it was normal. We've seen it in 2017 when it went bananas as well. And very important, just work with realtors and mortgage brokers that have seen this kind of a market, because we're more at ease and we're more comfortable. Yeah, it's stressful, but we can navigate, especially first-time home buyers. Like, you need to do your homework on us realtors and mortgage brokers. My final closing closing remarks will be pretty much what I was saying earlier. And this is just a recap. If we look at this, the numbers, the sales versus 2021 in July, we are up in Oakville, Burlington, and Hamilton anywhere from 3.4 to 6.8%. I like to repeat that because the media is not going to tell you that. They won't give you the the numbers to the dollar like we do. We micro analyze everything in our pocket. So townhomes are up 2.3 to 11.3% versus last year. And then condos are up 4.3, and then crazy Oakville is up 35%. It's numbers. I mean, the data's there. But if this starts to go the other way month after month, and we start to say, okay, now we're down 5%, 10%, then we'll start to change our approach. But for now, sellers, you're still good. You're up versus last year. So I believe this is going to take us to the end of our webinar. If there's any questions, we're going to just take a look at the chat right now to see if any questions came up.
Just say, like, to add to that, it's not being a crash, is we're not seeing people default on their mortgages, right? So that would be a huge indicator if it was actually crashing. You'd see a ton of defaults.
Yeah.
And you would see, like, there would be a flood of more homes in the market.
Excellent point, because we do get asked every now and then, hey, do you guys have any foreclosures? And in Canada, we, at least in Oakville, Burlington, Hamilton, we don't see them. So if we start to see foreclosures and defaults in mortgages, that could be a sign. We'll talk about that in a webinar. But right now, knock on wood, we are okay,
Yeah.
and there is no signs to that extent. One other big thing is we're expected to have, I think, 350 to 400,000 immigrants coming into the Ontario region within the next 6 months to a year. We've had the immigration very slow because of COVID. So if we don't even have enough homes right now to cater to that much immigration. So there's a lot of positive things that will happen in the next few months, I feel. Megan, anything else?
I think that's everything. I was just looking in the chat. I don't see any other questions right now.
It means that we answered everything. So
Yeah.
if no questions means we did our job, right?
We do
So-
have a little survey too, if you guys don't mind answering that at the end.
Yes, please. Yeah, that's it. Thank you so much. We'll see you next month. Have a great summer and talk to you soon.
Thank you, guys.